Hi, and welcome back again to the Option Cobra Trade Walkthrough, taking a look at the Junior Gold Miners Index, GDXJ, the smaller cap gold mining shares, which, although our trade on gold is not faring so well, we did hedge it twice with the recent big up leg in both gold and gold stocks. I think it might be time to revisit as well. So let's jump in and take a look, shall we? First of all, here's the trade recommendation from yesterday. You can see October 8th, right? Gold is up big again today, right? The junior gold miners, GDXJ, are up even bigger over the past few months. We'll take a look at this second. Normally, they're pretty well correlated, right? But recently, they've absolutely outperformed gold, which has been a great performer. So let's position really for a slowdown in the rally with a bearish out of the money November call spread. So simply going out, selling the 115, 120 call spread at the time, have more than 11 points of upside cushion on the trade, receive an 85-cent net credit. So nice risk return on that, right? So able to make 85 bucks, right? Risk 415 max, and we rarely let them get to that point without hedging or something. We do have the ability to, have the weeklies in the interim to hedge, but that return on risk just over 20%. So like that as well. Here's taking a look at gold from yesterday. You can see it had broken out to a fresh new high, getting as overbought basically as it has been over the past year. You can see 9-day RSI well over 80, well over the 20-day moving average. Bollinger percent be over 100, right? MACD reaching an extreme. More importantly, IV up on both gold, and we'll take a look in a second on the GDXJ. So certainly sets up ideally, I think, for really not even a pullback. I think a pullback towards that 20-day moving average might be coming sometime soon on gold and gold stocks, but really just for a slowdown in the rally. So here's that comparative performance between GDXJ, the junior gold miners, right, versus gold over the past 3 years. So you can see for the most part, it had been correlated until about half a year ago, right? Where you saw brief little flurries where GDXJ in blue, outperformed, underperformed gold. But for the most part, the outperformance would lead to a reversion back, as it did here, here, and here, right? Almost every time. So every time you saw GDXJ with a big relative outperformance, it would come back. Lately, though, we have seen that outperformance get to an extreme, to say the least, as now we have seen, since here we're seeing GDXJ basically up well over 100%, with gold up less than 50%. So I think this sort of relative outperformance will slow down here with GDXJ being a relative underperformer to the price of gold. And I'm probably, as we know from the trade we have on in GLD, less than bearish, less than bullish, I should say, on gold up here, a little bit bearish. IV also getting a little extreme. Here it is on GDXJ, right? Getting to the highest readings we have seen since those, tariff tantrum lows in the market, right? Liberation Day lows, right? So implied volatility also at the highest level, which means you can get further out of the money and get the same net credit on these call credit spreads, or put credit spreads for that matter, or get a little more for the same distance, or where we're playing somewhere in between, a little further out, a little bit bigger credit, hence that kind of 20% return. So you can see how the IV has lifted here, right? And we'll look for that to probably pull back once the rally in gold slows down. The nice thing, if you will, about gold and oil stocks, IV tends to pop when it rallies, right, and drop when it drops, right? Unlike stocks, which are the reverse, right? Normally, stocks, you see IV contract on a rally and kind of expand on a dip. So we'll see how the trade fares. Here's the actual fills, pulled them off from yesterday. You can see most of you getting, at least that 85 cents or so, as GDXJ actually rallied higher here. So we'll see what happens going forward, but able to sell a nice 45 IV here, which is at the upper end of the range for GDXJ. So kind of explains the rationale behind the trade. And really the biggest rationale is this comparative huge outperformance to the junior gold miners versus the price of gold, which normally have been very highly correlated, and any brief kind of outperformance was always met with a reversion back. So see if it happens this time or not. And as always, trading is about probability, not